What's up, everybody? Jake from StratGeeks coming at you once again, this time with a brand new, hot off the presses strategy that we have entitled Axios. Version 1.2. It's actually version 1, 1.2, 1.3. Anyway, it's the version we're releasing to the public grand opening, and man, do we have this thing dialed in. Dialed in. We've been working on this thing for months and finally have it dialed in well enough to share with the world. We got an awesome sale going on. You can get ORS and Axios for 3 months for less than the cost that it would normally be for just 1 month for just one of them. These are today's results. The strategy will stop trading after however many net wins you want. Right now I have it set to 3 wins and stop trading. In this video I'm going to go over how the strategy works, at least most of the features, some of the features. I'll go over a 30-day backtest, and then I'll go over in some detail on why we use 30-day rolling backtests as well, based on some science, some scientific papers, which I also went over on the last video, but I might touch on it again. We'll see. Anyway, it is almost 2 o'clock in the morning here in Bali, so we will see how much energy I have. Maybe or maybe not, we'll get to the scientific paper and the backtest part. We'll see. I don't edit these videos, I just go for it. And yeah, here we go. So what should we do first? So let's look at, the most exciting thing I think to look at first is the 30-day backtest. And honestly, we've developed multiple strategies. Eamon, my partner, and I, we've developed a lot of strategies over the years. And I don't think I've ever seen results quite like this with just one template, one strategy over a course of 30 days. Lots of range days, lots of trend days, a good mix. So let's look at Axios, real-time and historical for the last trading period. And there we have it. Profit factor 2.68, 13,000 profit, only a drawdown of $1,000. Absolutely amazing. Plenty of trade sample size for a 30-day window, 159 trades. The win rate, 64.15%. Might not seem that high to some people, but our risk reward on a lot of these, the reward is much bigger than the risk. So that's a really, really nice number. Another thing that I like is they're not all long trades. They're not all short trades. Happen to have a bunch more profit on the short trades here, but it's not like 10,000 and 3,000 or 11,000 and 2,000 or whatever. It's a fairly well balanced, especially with the win percentage, balanced pretty well. The largest winning trade is 1,400. You could even cut that off depending on, so this is optimized for the very, very top end of a 50K PA account or 50K eval account. Honestly, you could have if you would have ran this thing this week from Monday, Tuesday, Wednesday, today's Thursday, you would have qualified a eval account already in just this week, which is pretty cool. This is a total of running 5 micros, so you can run way fewer micros on the strategy as well. So there's a lot of room to wiggle. So you could get this drawdown to more like 500 and then reduce your profits to like 6,000, 5,000 or so. And maybe even use a smaller account or just be more safe on a 50K account. So everything that I've been seeing so far, the backtest matched the live results pretty darn well. Let's look at the day by day. So if you look at the winning days versus the losing days, the winning days are massive compared to the losing days. And we'll go over why that is in some of the settings. Today would have been the best day that we've seen. 2,100, these trades matched the live results per backtest perfectly, 100%. So even like you can see, just this week, you would have qualified a 50K account. What do we got here? You got... Why is the hover not working? Anyway, 800 plus 800 is 1600 plus 2000. That gets your more than what you need for your profit target to qualify an account, just right there. So, and then we can actually look at the trades too. Let's look at the trades. A lot of trades in there. That's a good enough sample size for our 30-day rolling back tests and optimizations, I guess we could call them. Now, with a 50K PA account, there are some firms that cap your wins. You want to cap your wins at a 30% of whatever the profits you're taking. So you'd have to cut this off at like 800, but still, that's only reducing. I don't call it be conservative and call it cut $1,000 off of this one. But still, you're looking at all of this. So it'll be minus 1,000. You go back to the summary. You're still looking at like 12,000, 11,500 with a drawdown of only 1,000. Absolutely incredible. So let's show everybody. This is actually a good day to analyze. So we have a few different things going on. Where should we start? This is the first video I've ever made on Axios. So let's start with, let's just zoom in on one trade here. And if you're familiar with ORS, we have the same on-off button over here. So you don't have to actually disable and re-enable the strategy. You can just turn it on and off over here, which is cool. You can say you only want longs, you only want shorts. You can close all also without disabling the strategy. So to put in a short, so right here we have a short, and we're set up with 5 micros for the current settings. So to put in this short right here, we need to be below this red line. This is the trend filter, something like a super trend filter. Okay, so we need to be below this red line. We need to be below, I believe this is a 9-period, just regular 9-period EMA. And then we also need, obviously we need to be in our time zone. So this strategy will start taking trades at 9:30 and after. So this one goes from 9:30 till 1 o'clock, 9:30 a.m. Eastern Standard Time till 1 o'clock. So we got number 1, below the red line, below the trend filter, below the moving average. And then this is the Axios proprietary indicator. It creates these red arrows or these green arrows. So really, we just need 3 things. We need to be below the trend filter, we need to be below the moving average, and we need to put in a Axios signal. So this is an Axios signal short. And then, yeah, it's all about this super sweet indicator that we've developed, really. And the additional filters. So you can see the Axios lines cross right here. So you can see the trade coming, which is cool. That's why we have included these lines. So right when these lines cross, that's what generates this arrow on the chart. And now it looks like this is like this with all strategies. It looks like the trade is entered at the open of this candle. Really, it's, you can kind of look at it either way. But I like to look at the entries actually at the close of the signal candle right there. So when you look at it plotted in backtest mode or even in live, it will look like this. But the entry is actually right here. Okay, so that's our entry short. And you might be asking, well, how do you put where is the stop and the target? That would be my next question. Really, really cool stuff. So this green line is the target for Axios. There's a few different ways that we have to set the targets. We got ATR, we got swing, we got set ticks. I'll go in over some of those settings. But see this line right here? This is a previous swing low. Let's draw that in. F6. So Axios is looking way back there to target that swing low. And as you can see, comes perfectly right to it. There's the green line right here. So that's target 1. This is MNQ on a 3-minute chart. So target 1 is here. That was a 185 tick target. And then we're going to let the second position, so this was 3 contracts. You can set this up in a myriad of different ways. So right now I have 3 contracts set for the first target. And then the second position is a runner position. And that position will stay in the trade until either it gets stopped out. You can also have a break even on there if you want. Or if we put in a reversed or opposite Axios signal, which would be this green arrow. And again, it looks like the trade closes here, but really it closes at the trade will exit at the close of this candle. We only had 2 or 3 candles in between our Axios sell signal and our Axios buy signal. So in this trade, we made 179 plus 2 contracts at 52. So 3 contracts at 179, 2 contracts at 52. And our stop was placed up here at 200 ticks over. And after trading the NASDAQ 3-minute chart for literally a decade, this is why I optimized it the way I did. 200 ticks will very rarely get stopped out with a strategy like this. So just give it plenty of room. And you can make this whatever you want. You can actually, yeah, there's a few different ways. This is a crazy strategy. We got a lot of options here. It's massive. In fact, let's just, no, we're going to go over that. Okay, let's stay so focused. It's 2 o'clock in the morning for me. Trying my best here. But I did want to get this video out today. Okay, and then let's clean this up a little bit. All right, so we have another trade opportunity here. We're still below our red line, trend filter, so shorts only. We are clearly closing below our moving average. I have it set so it's just closed below, but with this strategy you can say you want it to be closing below and slope color, but right now I have it just on close below, so that we got filter 1, close below moving average, and then we put in this sell arrow. And that target here is from this is so cool. It's like one of my favorite things about this strategy is how it targets previous swings. It's literally targeting previous price action structure. So it's so far away we got to draw it in here. So here, and now let's go find it. Yeah, it's this one. Literally targeting this swing right there. So cool. So cool. It's like magnets. So that was the first target here. And then we still have our 2 contracts as a runner. And you can see we put in a green arrow rather quickly here, only a few candles later. Well, 1, 2, 3, 4, 5, 6 candles later, we put in that green arrow here. And then the second trade exits at basically the top of this candle. And this next trade, basically the same thing. We got below our trend indicator, we got below our moving average, we put our red arrow in, and our swing is this candle low right here, so that's our target. And then we put in 3 contract winner at 250 ticks, and then I wanted to just show this last trade too. Pretty cool. So the runner keeps going all the way until we put this green arrow in, and then we exit automatically at 562 ticks. So 250 and 562. So, and then we have the strategy set to stop trading after 3 net wins. And that's all we get for the day. Pretty awesome. So let's do this. Let's go into the strategy settings. And I'll show some of these. I'm not going to show all of them, but I will show some. So for position 1 and 2, You can say, well, maybe you want 2 and 2, or maybe you want to reduce everything. Maybe you only want to do 2 and 1 contract, keep the same ratio. Maybe you want to do 6 for the first position, target position, and then 3 for the runner. Or you just want to do 1 and 1. You don't even want a runner. You can just target just the swing. You can tell the strategy, do you want to stop after 3 wins, or you want to go unlimited or 5 wins. You can tell it to stop after however many wins you want. You can also use a max session loss dollar amount, which won't be exact the way that it works, but it'll be close. So you don't want to risk no more than $450 or so, or maybe you want to stop after $700 or whatever. Right now I have it as unlimited. And then the entry settings here for the Axios. This is what creates the buy and sell arrows. And then let me just pause for a second and scroll down. So I'm not going to go over all of the settings. We'll go over 70% of them. I'm going to save 30% of them because I like to protect our current subscribers and not just throw the settings on YouTube for everybody. That's for everybody's, for my own personal well-being and our current subscribers' well-being. But I do want to show the exit settings. So the time window here, you can say you want to trade from what time to what time. So you're going to start trading at 9:30. This template stops at 1 o'clock. You can plot your stops or targets or not. But here's what really gets cool. So you can say your initial stop loss, whatever you want, but the target type. So we can target the swing. And you can tell it the swing strength. Right now I've found that 5 works really well for the NASDAQ 3-minute. Or if you want tighter targets, you could have a swing 2 in there. Or if you want really big targets, you could have a swing 10 in there. But you can also use ATR as a target. So you can ATR multiplier. Maybe you want to do 1.75 ATR as your first target. And you want it as a 7-period ATR for the last 7 bars. All sorts of flexibility that way. You can also use just regular ticks. So maybe you want to have just a regular 1-to-1 risk-reward ratio. You could just say ticks here and then target tick value 200. So you'd have 200 and 200. And then you can also have an actual dollar amount. So US dollar amount. And then you could say I want to risk, or I want $325 targets. Pretty cool. And then for break evens, you can set your break even. You can have your offset. You can also use auto trail. There's all these other functions that work better in certain markets, maybe. So you can flip the trade when there's another arrow. You can enter. Yeah, it just depends. Lot of flexibility here with the strategy, and then there's a couple other settings up here that I'm not going to show in this video, but yeah, it's looking pretty good as far as explaining most of the settings. Might be cool to, yeah, do I have the energy? I think I got the energy. And then exit time, of course. So at the very worst case scenario, if you had a trade that entered at 1 o'clock or 12:59, then at 1:59, that trade would exit automatically. Like I said, we are offering an amazing sale right now for ORS and Axios at the same time. So let me pull up our website so you can get in contact with me so I can send you a special link. You got a Discord, sign up on our Discord and DM me here. 1 second, let me pull it in. I'm going to pause. Yeah, so go to StratGeeks.ai and then scroll down a little bit. We actually don't even have Axios listed on our website yet. But just click on the Discord link. That'll get you signed up with our Discord server. And then shoot me a direct message, and I will send you the special link that's not on our website where you can get Axios and ORS for less than the cost of just 1 month of ORS right now. There are a few spots available, so move fast so you can secure a spot on the sale. One of the reasons we don't just allow hundreds of people the sale is I literally spend an hour and a half with each person, setting everybody up individually on Zoom. Why? Because we care. And I want people to be set up as perfectly as possible. yeah, so sign up with us and we'll get you a Zoom link and my schedule, and it'll be basically white glove setup. But yeah, this is what my face looks like on the Discord. Jake@ORS is my DM, but just find me that way. You can also send me an email. And I'll also, here, wait. Let me just write my email in here real quick. onetraderjake@gmail.com. Let's make that bigger. Send me an email. I can send you the link that way too. Where is my font? Here. onetraderjake@gmail.com. And also, as we roll through our optimizations every 30 days, you'll get constant template updates from me directly. Template, load. So I'll just send me a DM and say, I'll be like, hey, do you want the new template that I just made? I tweaked it a little bit. It's looking really good. And then you'll say, yeah. And then I'll send it to you via Discord and I'll show you how to install it and everything. But like right now, so basically you would do this after you install it and then load, backtest, enable, okay. Okay. Yeah, heck yeah. Man, I am really, really stoked on this strategy, folks. Really stoked. And the backtest is matching the live quite well. Oh, let me show you. Okay, so you got 13,000 with a $1,000 drawdown. Maybe you want to reduce your contracts a little bit. So let's do that. Let's keep the same ratio. So let's do 2 and 1. Enable. Okay. Strategy performance. Too many screens. And now we've reduced our drawdown by a couple $100 and we've reduced our profits a little bit. So you can even go lower than that. Let's see. The original settings are definitely the best though, for sure. Let's see what happens. I actually haven't even done this. Let's just do 1 and 1. Actually, I wonder what 1 and 0 would look like. Oh wow, look at this. Look at this. So like a lot of people who sell strategies online, they want to make this part right here look as fantastic and massive as possible. Me, I want to make it look as realistic as possible for 50K prop firm accounts. That's like my baseline. We can make this look as big or small. Like I'll show you. So right now we got 1 and 1. So this is just 2 micros, but look at the drawdown. Only $570 for a $5,000 profit. That's easily enough to make a withdrawal or a qualification in 30 days or less without getting anywhere near close to blowing your account up. 180 trade sample size, almost a 63% win rate. Largest winning trade, only $573. Those are sick statistics for our 30-day sample size. Let me try something I've never tried before. Let's do 1 and 0. So just 1 micro. I don't even know if this is going to work. Now I'm getting excited. So I get excited as being as realistic as possible. But then we'll go the other way. Because what if you had a bigger account? Oh, see, like look at this. You could do this with a $1,500 PA account and get a payout. That's crazy. Hypothetical, of course. That's crazy. $275 drawdown, $2,100, 2.54 profit factor. Average time in market, I love this. Only 6.84 minutes. Largest winning trade, only $286. Largest losing trade, 101. See the average winner? Oh, here you go. See the average winner is $55. The average loser is like $34. So it's a 61% win rate, but look how much bigger your average winner is than your average loser. So really you could translate that to like a 67% win rate if you can. Oh man, and then look how balanced the longs and the shorts are. I love that. But now let's take it the opposite direction. Let's say you had a 150K account and you wanted to do, what's our ratio? 3:2. So you could do, let's try 6, 5, 6, 4. See what that does. This is like, it's very flexible. And now, see, this is where it gets, make it flashy. 30 days, 22,000, max drawdown, 2,400. So with a 150K account, that's doable. Look at that. Look what it does to the profit factor. Bumps it up to a 2.96. 67, almost 66% win rate. Average winner, $400. Average loser, $270. So almost an extra 100, 270, 370, more than 120 something dollars. That's a nice positive RVR. 126 trade sample size, that's fine. Pretty fairly good balance between the longs and the shorts there. And then let's bump it up one more final notch, and let's do 9 and 5. Maybe for a 250K account. 30 days. Now we got 27,000 with a $3,200 drawdown. Totally within reason for a 250K account. Totally within reason. Nice equity curve. Let's look at the trades equity curve. Yeah, heck yeah. That's beautiful. Beautiful. Love it. Absolutely fantastic. So yeah, the sale right now, not sure when you're going to watch this video, but definitely shoot me a DM. It's possible the sale could still be going on. By the time you watch this video, I don't know, but shoot me a DM as soon as you can. Let's go ahead and bring in, let me pause. So this is the academic paper that I had discussed in the previous video. I got ChatGPT to help me break it down again, so it's going to be a little bit of a different breakdown than what we went over but in the last video. But I think it's worth going over some more stuff because it is quite complex. But the more I think about it, the simpler it is. It's tough to explain, but ChatGPT is going to help me. It's going to help us. I used to optimize for like a minimum of 90 days and then up to 180 days. But basically what I've been discovering is, and this is not just me, is that it's probably better when, especially when using something like the NASDAQ, to just optimize for 30 days and do rolling optimizations. And this paper basically proves that. I had somebody comment on my last video actually, and he was like, "Oh, you didn't know that? That's what all the quant firms do, or that's what all the big players do." And I was like, well, I guess I'm learning now. So yeah, you can look this paper up, an economic analysis of volatility discovery, but you can see how complex this ends up getting right about here. When you start seeing these equations, this is why I got GPT to help me break it down for us. But we're going to go over this. Should we take about 10 minutes? I mean, look at these equations. I'm not a professional when it comes to this kind of stuff. Not even close. But I show you that I scroll this for you so you can kind of get a look at this. So you can kind of get an understanding of how much work these folks put into what really boils down to telling me and telling us that a 20 to 30 trading day look back period for volatility clustering or volatility discover is actually the optimal amount. Somehow this says that. I mean, it's extensive. Volatility adjustment. It's like volatility buckets or volatility regimes in today's market are about 20 to 30 trading days or 1 month. And it goes through and it talks about Well, we'll just go through it. Talks about how big firms adjust for those windows, for those shorter windows. So number one, dynamic adjustments. So dynamic adjustment cycles, the core idea. The authors describe volatility discovery as a process through which markets absorb new information into volatility, not price. Each exchange, NASDAQ, New York Stock Exchange, etc., generates its own realized volatility measure, and these measures are fractionally cointegrated. That means that they share a common long-term volatility trend, but each market temporarily deviates from that equilibrium before gradually converging back. This back and forth drift and reconvergence is what the authors treat as a cycle of volatility discovery. In short, volatility information doesn't arrive everywhere at once. It ripples through exchanges as traders react, algorithms update, and liquidity adjusts. Number two, how the adjustment process works. The authors model this process using a fractionally cointegrated vector autoregressive FCVAR framework, which captures both, number one, short-run dynamics, in other words, fast reactions, order book noise, microstructure events, and then two, long memory adjustment, the slow drift back to a shared long-run volatility equilibrium. I look at this as like smaller sine waves, like tighter together, and then more elongated waves farther apart, and then basically equalizing them both or averaging them both. And then continuing, the fractional aspect means past volatility shocks decay slowly, producing persistence without full stationarity. In a mathematical form, here it is, when 0.5 D1 volatility has long memory, meaning shocks can take tens of trading days to fade. Shocks can take tens of trading days to fade. Now, I don't know how long you've been trading, how long you've been watching this video. People, if you're watching this video, I don't know how long you've been trading, but intuitively, I have felt this for years. But it's so cool to read this and the paper, and somebody's making like legitimate quantitative sense out of it. That fading process is the cycle. A volatility shock starts on one exchange, redistributes through others, and finally reverts as they realign, then a new cycle begins. Number three, what they observed empirically. Using high-frequency data for 30 large U.S. equities, 2007 to 2013, the authors found volatility leadership rotates periodically. This is interesting too. NASDAQ may lead for tech stocks. New York Stock Exchange or ARCA may lead later. These leadership shifts occur on the scale of weeks. Here it is. These leadership shifts occur on the scale of weeks, not days. And it also doesn't say not years or not quarterly. It doesn't say quarterly. It says scale of weeks, not days, suggesting a roughly monthly volatility redistribution cycle. Just this right here started to confirm my suspicions that we should be optimizing in rolling 30-day windows for all of our strategies. The data show persistent yet non-permanent relationships, volatility regimes that evolve, decay, and reset. Even though the authors don't explicitly say 30 days, their empirical results indicate that volatility regimes last several weeks before rebalancing, matching a 20 to 30-day trading cycle. 4. Why this matters for trading, ORS, Axios, whatever. In practice, these findings map directly to how strategies like ORS or Axios behave. Each volatility cycle reflects a rise and fall phase of institutional order flow and information absorption. When a cycle completes roughly every 4 to 6 weeks, the volatility structure resets, changing the shape of the opening range, range breaks, and false breakout probabilities. That's why using a 30-day optimization window makes sense. You're capturing a single, statistically coherent volatility regime before leadership and flow patterns rotate again. And supporting citations, we're not going to go into that summary. Volatility discovery, gradual cost. I guess we can go through this. Excuse me. Summary, the practical takeaway. Volatility discovery equals gradual cross-market re-equilibrium. Equilibration. Cycles, long memory, reversion waves, typically lasting several weeks, not several months, several weeks. Institutional volatility models re-optimize monthly to stay aligned with the current discovery regime. There it is. All bold, all caps. Highlight. This mathematically supports your 30-day backtesting and monthly re-optimization approach. In other words, volatility discovery cycles last about a month. This is why institutional systems and ORS and Axios should retrain monthly to stay synchronized with current market volatility. I know that was a lot, but this is a lot more. Anyway, that's why we do 30-day rolling backtests now. Yeah, okay. And what else do I need to share? Probably not much, actually. 36 minutes, that's not bad. It's 2:30 in the morning here in Bali. Done trading for the day. Axios absolutely crushed it. Love to see that. Looking forward to hearing from as many of you as reach out to me, and getting some people set up with Axios and getting some Zoom meetings and meeting people basically face-to-face on the online, on the Zoom. I can't tell you many other companies that sell stuff are as hands-on and one-on-one like we are. I really like to get to know each and every one of our subscribers by name, meet with them for an hour, and then sometimes even meet again later. I'm not opposed to that either. And I'm always responding to DMs on the Discord as quickly as I can. And yeah, so let me just pause one more time. Yeah, and again, there's the daily. Well, this is optimized for the for the 6 and 9 or whatever. But it's pretty cool. We have as much flexibility as basically as you need for whatever account size you might have. Anyway, reach out to me, number 1, traderjake@gmail.com, or go to StratGeeks.com, scroll down just a little bit, click our Discord link, send me a DM, Jake@ORS, and I will send you the link for the sale for 3 months for less than it costs for just 1 month of one of the strategies. So you get both strategies. All right, everybody. Appreciate you. I'm going to go to bed now, and I'm going to upload this video. Well, I guess I'm going to upload this video, then I'm going to go to bed. But feel free to check out some of the other videos on our YouTube channel. And I guess what all the YouTubers say, even though I don't consider myself a YouTuber, I'm a trader. I happen to do this YouTube thing a little bit here and there. But they say, please like and subscribe. So please like and subscribe. Thanks, everybody. Jake, StratGeeks, signing out.